Welcome to the July 9th, 2021 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our nightly report. Hopefully it serves as a nice change of pace, as well as offers some insight as to how we set up our charts, what time frames and indicators we use. And on the left side here, we have the daily chart, and on the right, the weekly. As you can see, we try to keep it pretty simple. There are a few moving averages and then a relative strength line and then volume with the moving average. Price and volume action is what we follow. We use the moving averages to gauge the strength of a trend, to locate low risk entry points and help guide our exits. So behind price and volume, moving averages are very important to what we do. So with that out of the way, let's get to tonight's video. First up, we're going to run through a few broad market averages. The Nasdaq Composite gapped significantly lower, reversed shy of the 20-day EMA and recovered to close back above the 10-day moving average. And Thursday's one-bar pullback probably did its job, which was to work off this short-term extended condition in the Nasdaq, which traded above the 10-day EMA for 2 weeks in a row. And also sets the high and low for next week, support and resistance. As this pullback was about 2.5% off the highs, sort of like the last pullback, which is a 2-bar pullback, and was close to 2% off the highs. And we're really not looking to time the Nasdaq here. We're just looking for the Nasdaq to chop around in this range while new setups develop in leading growth stocks. On to the S&P 500, pretty much the same deal here. Reverse shy of the 20, closed above the 10-day EMA. So we have a support and resistance for next week. IWP, which is a mid-cap growth ETF, which gives us a pretty good idea of what the stocks we like to trade are doing. And this ETF undercut the 20-day EMA, bounced back, did close below the 10, but decent reversal, so we'll just have to see how it holds up next week. But like the other averages, looks like it possibly set a short-term low. And on to open positions in the model portfolio. We are still long a half position in ZS. The first stop was taken out around 222. That was a tight stop. The other stop we had beneath the low of 7.6 held up. So we're still long a half position in ZS. We also have 2/3 of our position still on in NVIDIA with a stop beneath Thursday's low. And our last open position is PayPal, where we are long with a 294 average entry. We bought over the 7.2 high and added on the breakout, and it's just above break even right now. Did not trigger our stop, which was beneath the low of 7.2 here at 288.89. So we're still long NVIDIA, ZS, and PayPal. And we did stop out of crowd, but we'll likely look to re-enter if we can get a pullback anywhere into this 260, 261 area, using Thursday's low as the stop. And we also stopped at a shop, which was disappointing action, following a really nice break of the downtrend line on 7.6 on a pickup in volume. And we also stopped out of LSPD. We purchased around 74.30, so it was about a 7-8% gain. We had our stop beneath the swing low here on 7.1, which was triggered on 7.8, but the price action did recover off the lows and close back above the 20-day EMA. And out of all the stop outs on Thursday, CRWD and LSPD are the only two that we might look to re-enter, either on Friday or potentially early next week. And our nightly scan work didn't reveal many low-risk buy setups last night, which is to be expected after the past 2 days of the significant pickup in volatility. But if the market is still strong, we should see some setups develop early next week. And we just covered A potential reentry in crowd and LSPD. We're also keeping an eye on shop if it can get back above 1500. Roku has pulled back to the 20, forming a handle here. There's the cup. We wouldn't mind seeing a few more days of chop here and then look for the price action to break this downtrend line as a starter entry. Same goes for UPWK, which undercut the 20-day EMA and recovered back above. We'd actually like to see the price action test this 20 again and hold up and maybe chop around for a day or two, and could possibly offer a lower risk entry point near the 20 where we could place a stop beneath the low of 7.8 for a starter entry, and then look to add to the position if it can work its way higher. And the last chart of the night is NTRA, which is forming a tight handle here at the rising 10 EMA just above the 20-day MA. Look for a possible break of this downtrend line or move through this 119 area as a starter entry, and of course look to add above the handle high. So just a quick recap. Thursday's price action likely did a good job of washing out some excess in the short term in the NASDAQ. And as long as Thursday's lows hold, that should give stocks some time to chop around maybe for a day or two and establish lower risk entry points. So overall, still a decent market for going long. Just have to be patient right now and wait for new setups to develop. All right, that's a wrap for tonight's video. Thanks for joining me. Have a great weekend, and we'll see you next week.